Hello and welcome to Business Today. I'm Siddharth Zarabi and with me now is Rajkiran Rai-ji, the Managing Director, National Bank for Financing Infrastructure and Development. Welcome to the show, Mr. Rai. Good to have you on BT TV. NaBFID has finally cracked infrastructure financing in India. That's the word on the street. You've successfully raised 10,000 crore through your first bond issue. How are things really going with this entire effort?
Yeah, we are quickly trying to ramp up our operations, and this was one big step for us, actually raising resources at a reasonable cost, because we are here to do long-term financing. So this was very important, a very momentous occasion for us, and we are overwhelmed by the investor interest.
Uh, since you said you are overwhelmed by the investor interest, what are the future plans for financing? Is this enough for now? What's the roadmap looking like?
That way, government had enabled us very well by fronting capital of 20,000 crores. And so that way we started our lending operations in December. So now actually since the sanctions have reached about 25,000 crores and we expect to sanction many more projects. So it is very important for us to raise the resources. So our plans are on now. Our credit team is processing like quite a good number of proposals. So we expect actually, this year we end with a book of at least 60,000 crores.
A book of 60,000 crore. Could you provide some more visibility on specific disbursals and sanctioned amounts so far?
Yeah, actually, like we give three set of numbers. So one is on in principle sanctions, because it's the first level where we do the initial due diligence and share a basic term sheet. So right now our in principle sanctions have reached about 55,000 crores. The final sanctions are about 25,000 crores. So we expect that our final sanctions will reach a number of 1 lakh crores by the end of this financial year. The disbursements are close to 15,000 crores. We expect that our March 24 number of disbursement should be close to 60,000 crores. With that plan, we are raising resources. We are expected, sorry, we are expected to raise about 30,000 crores from the bond market.
Okay, Mr. Rai, access to low-cost funds is a very important necessity for infrastructure projects, and we know the kind of infrastructure development that's been happening. But parallelly, we have also seen the cost of capital go up, and this is expected to perhaps now stay at an elevated level for quite some time. We are not still talking about a cut. Is that impacting project execution on the ground? Have you, during the conversations that you and your colleagues may be having with potential borrowers, witnessed any impact of that?
We are not really, come across these issues at this point of time, because infrastructure projects are sufficiently profitable, and with the kind of economy uptick, actually, there is sufficient income generation, and we have seen a quite comfortable position of all infra projects as it regards to cash flow. So the higher cost of capital is not coming in the way as of now.
Okay, higher cost of capital is not coming in the way. Before I move on, just a quick comment. As a lifetime banker, really, overall, how do you think the cost of capital is panning out? We have seen what has happened on inflation. We are seeing what is happening globally. What's your own sense about cost of capital for industrial borrowers over the next 2 to 3, 4 quarters?
I think it is quite stable now. I think as a country, we have handled it very well. Both our government and the regulator have handled it very well. And I think based on the data, what we see, it is quite stable now, and it is not expected to go up from here. So it is quite stable. And I think all our project assumptions are factored in these numbers. So we are quite okay with these numbers now.
Okay. Mr. Wright, tell our viewers about the kind of sectoral momentum that you are seeing. There's been one of the most visible programs for the common man has been the road and highway development program. That is very impressive, and a lot of other associated infrastructure. There's also talk about city gas, data centers, and other sectors. Your own assessment of the sectoral momentum you see.
I think the highest share is in the roads and the energy sector. So that we can't take away, because this is two sectors which have established very well, actually. It has happened because of stronger counterparties. Like, in case of roads, is NHAI. In case of power transmission, it's power grid. And in the renewable space, SECI, NTPC, and this kind of players actually have given a lot of stability to these sectors. So naturally, the investment here in these sectors is quite robust, and a lot of private players and even foreign equity players and pension funds are actively looking at these sectors. The other sectors which are coming up, as you rightly said, data center, a lot of investments are flowing in. City gas distribution is taking off. Actually, that way allotments have happened, and there is a good connectivity of gas pipelines across. So it is slowly taking off. We are seeing slow transition to CNG in many places, be it the cars or the trucks. So I think slowly that is also taking off. And then ports and airports also that way have taken off very well, and we have seen a lot of investor interest in these areas. So railways is something where we are going to see huge investment this year.
What part of the railways pie are you talking about?
Actually, I think the capex which is planned for railways basically is coming on mostly electrifications, the new trains, and what we call the rolling stocks, and the station upgradations. There are many areas where activity will be there, and it is a part of our logistics cost reduction program. People are talking about the logistic cost, and we have to drastically bring it down. And in multimodal logistics, railways play a big role, particularly in the container movements and other good transport. So a lot of investments are going to come in that space.
Since you spoke about foreign investment, foreign insurance funds have been investing in InvITs, and uh, how how sustainable do you think their interest will remain in the medium to long term?
Actually, these funds have invested in InvITs basically on the road side and the power transmission side as we speak, actually. So here, mostly it is annuities. So some are on the toll side also, but mostly annuities. Annuities give a good stability because it's a fixed return and very stable income coming from the government counterparties. So there is not much risk involved. So they factored in that. And tolls basically looking at the economic growth of the country and the number of vehicles which are likely to go up substantially with the 5 trillion economy in sight. We will see a lot of movement, and I think the toll is also doing well, progressing well. So I think it's not only that they have invested, they are investing further. So that means they are very happy with their earlier investments. Their returns must be better than what they expected.
Absolutely, and infrastructure are long gestation projects, and returns are very important. As we wind down this conversation, Mr. Rai, one of the final questions that I have: what kind of further changes would you like to be addressed as far as infrastructure policy is concerned? A lot has been done, but are there any areas that you feel need more policy focus?
Yeah, actually, the concession agreements have to evolve for private participation to come in. We have done it in some sectors already. The remaining sectors also have to come with better concession agreements, which will give comfort to the investors. Otherwise, the enablements on the infrastructure, whether it is land acquisition, environmental clearance, I think we have got it right now. I think there are no delays because of these reasons. I think maybe it is better concession agreements which will help more private participation in infrastructure growth of the country.
Absolutely, and that is a area that has seen changes in the past, but will continue to require modifications to adapt for newer emerging needs. Mr. Rai, thank you very much for your time with us today. With that, it's a wrap on this conversation with the MD of NaBFID. We'll be back with more. Do stay tuned in. Back after just a short break.
Thank you. Thank you.
Thank you.